Welcome to the Private Practice Survival Guide podcast with your host, Brandon Seigel. I'm a published author, speaker, entrepreneur, and private practice strategist dedicated to transforming the way that healthcare functions. This podcast is all about empowering you to create the change you want to see. Let's dive in. Welcome back to the Private Practice Survival Guide podcast. I'm your host, Brandon Seigel. In this episode, we're talking about really strategies around evaluating passive income. You know, something I want to remind everyone is that you didn't build a practice to be broke. And we know that margins in our practice can be small. And it's so crucial that we identify ways for our money to work for ourselves. And sometimes that's through service offering. Sometimes that's through investment. Sometimes that's through, different approaches to function in our practice. At the end of the day, we need to be able to identify ways that are not just tied to generate money from our time. And so most therapy practice owners are focused on making money to afford everyone else's salary, but they're not focused on what is working for their benefit, et cetera. And so I kind of want to talk about how we look at opportunities, how we organize opportunities, and some quick tips and just dialing in our passive income approach. And for the sake of this episode, I want us to look at passive income as anything that does not rely us to be the driving action day in and day out. Doesn't mean that we're not strategically involved, doesn't mean that we don't have other people generating that income. But one of the things that I want you to recognize is that when we look at an asset, we look at something that is an appreciating asset. We look at something that is a depreciating asset. One of the reasons why I love business is that we have this opportunity to generate an appreciating asset, something that grows in value while also potentially delivering passive income, depending on your business model, your business algorithm, and how you go about things. So here's a reality check for you. 55% of small business owners are not saving enough. The Federal Reserve actually said that 55% of small business owners have less than $50,000 saved outside of their business. Now, when I say outside of their business, I'm talking about money that is not controlling or impacting their business. Honestly, it's not enough. And I think we forget that sometimes we're creating jobs in the businesses that we're creating for ourselves that are underpaying ourselves. And we need to look beyond the realm because we average 50 plus hours a week often. That's the average caseload. And so any passive income that isn't truly a second job is crucial to our survival and success. Now, I'm going to take a sidebar here and just reframe something. One of the issues that I do see often is that people want to create passive income through their business, but they don't really understand the business algorithm. And so what they're trying to do is they're trying to create what I'm going to call is a high salaried equivalency for an owner in which they don't work. And their viewpoint is, hey, I'm this great clinician. I'll hire 10 therapists and they'll make me $1 million a year. Then I get to sit and travel the world. That's not realistic. I'm sorry. That's a greedy viewpoint. 70% of your revenue is going to go to your staff, most likely in some capacity. Total facility, total people, all of that. So this idea, I want you to recognize that every employee brings cents in the dollar for your personal fulfillment. So sometimes we have to generate money for ourselves outside of service, delivery, and people. And so just thinking outside the box, what does that look like? How do we do that? And so I want you to build your opportunity filter. That's the first thing I want you to do. And the opportunity filter is a written set of non-negotiable criteria, and that anything that you're going to invest, anything that you're going to build must pass before you spend a single hour researching. So I have an opportunity filter and different categories. So sometimes we'll build the opportunity filter of building a course, building a new business, investing in a new business. Sometimes what we'll do is we'll look at investments and we'll say we want our money to work for us. So there's two different opportunities here. One is just a return on investment. The other is, hey, if I put this sequence together, it's going to generate revenue for me. And once I set it, I can forget it, so to speak, or whatever that may be. So understanding what that opportunity filter looks like. Recently, I have looked at a lot of businesses because I personally want to build my business portfolio. The problem that I'm seeing in the businesses that I'm looking to invest in is I am looking to invest in a business that already has that infrastructure. I'm not looking for another job. And a lot of these businesses don't actually have true net profit. They have owner's salary, and the owner's salary is being seen as a draw. So I'm going to give you an example. I find a business that's doing $3 million a year, okay? And they're showing a $300,000 net profit. But what they don't value correctly is that $300,000 is the owner's benefit, but the owner's putting 70 hours a week into the company. So it might cost me $300,000, or it might cost me $150,000 to replace that owner. So I'm not going to pay a multiplier on $300,000 when maybe it's really $100,000 or $150,000 true EBITDA. So that earning potential, what I'm looking for in my filter, these are things I'm trying to work on. And so when I'm looking at our filter framework, there's 5 different criterias that I want you to look at. So the minimum return threshold, and again, this could just be an investment, but I typically am looking for 12 to 15% annualized return on my money. Must be a low-cost index fund or an offer, looking at depreciation, looking at appreciation, looking at tax shelter. All these things are part of it. And again, some of this is just investment strategy. The maximum time commitment. If I am looking for an investment in something, what is the maximum time commitment? You have to define your number. Are you looking to put in 2 hours a month? Are you looking to put in 10 hours a week? What does that look like? Passive, requiring 10 hours a month. A lot of people would call that a part-time job. I don't, but depending on your commitment, you need to look at what's the maximum time commitment that you want to put into this business. Risk tolerance, some investments have major risk. One of the things, I recently invested in a fund and it went way up and it went way down. It's a higher risk investment. I knew that going into it. Liquidity requirements. How quickly can you get that money back? What liquidity do you need when looking at these things? And so match your filter to your life stage and your cash flow needs. And then competency alignment. Could you explain the investment to your spouse in 5 minutes? Never invest in something you can't understand. And so really understanding whether you're investing time, money, resources, really understanding it. So there are certain businesses that I may never invest in just because I don't feel I have a competency to run, manage, and own that business. These are all things I want you to look at. So, Benjamin Franklin once said, an investment in knowledge pays the best interest. And so I think it's really important that we invest in growing our knowledge before we just turn over the funds, so to speak, or turn over the attention units, whatever you're investing in. And so write your opportunity filter on a single index card. Post it where you review your financial decisions. If an opportunity doesn't clear your criteria, it goes in the no pile without guilt. And so ultimately, sometimes you gotta, quote unquote, look at 100 eggs in order to find your golden goose, so to speak. And so I think that as we look at this, one of the things we need to recognize is we need to value our own time. And so I want you to calculate your true hourly rate. Most practice owners dramatically undervalue their time. And there's two different aspects to this. One is, what is the current time valued at? And what is the time you want, the value you want your time valued at? So your true hourly rate, if you take how much that you're going to make and how much time you put in currently to generate that revenue for yourself, your take home, you will generate an average hourly rate. But then I want you to identify how much money you want to make, even if it's the same, and how much time. And so now you're going to decipher what you want your time to be. So I may say, hey, right now my time is valued at $85 an hour. I want it to be worth $500 an hour. I want it to be worth $1,000 an hour. Really generating that differentiation is really, really important. And so sometimes what we do is we look at, hey, if I were to take on, so one of the things I recently was looking at was maybe I would invest in Airbnbs. When I recognized the time that I would take, so the cash liquidity, cash out was a concern. The time put into managing and marketing and filling the space, the time into fixing it and everything. What I recognized was my time, my average revenue for my time went down by over 50%. So sometimes we look at these things as, well, that sounds more interesting to me. Like, I'd rather spend my time marketing an Airbnb than running a private practice. But we don't recognize the value of our time can go down, and we don't recognize that trade-off. And so looking at that is really important. When we're looking at our investments, we need to understand where our time is going. We need to calculate our investment, our annual return, our monthly hours, our true hourly rate, and the liquidity of that investment. And so then we can build our investment education plan. What do we need to learn to be successful at this? The single most expensive investment mistake is deploying capital before you have competency. So understanding the 3 knowledge gaps every practice owner has is really important. And so when we're looking at non-business function, we find that there's a major knowledge gap in tax strategy, in asset class gap, and in risk management gap. And I'm going to say that again, the 3 most knowledge gaps that I'm seeing in practice owners today related to investing outside of their business is there's a tax strategy gap. Most owners overpay taxes. There's an asset class gap. Most owners only know 2 vehicles, savings account and stock market. They don't understand other opportunities. And then there's a risk management gap, insufficient overhead insurance and different factors to protect yourself. And so as you're looking at your investment strategies, it is important to kind of start to build these educational gaps by filling them with knowledge. And so I want you to identify what asset classes you're considering, what books, podcasts, courses you may consume in the next 90 days. Having an advisor, having a mentor, having someone to look at and work with on this is really important. And then understanding, what does your small bet period look like? What are you going to trial and error? What is your risk tolerance with that? And what is your timeline to be competent in that approach? So the other thing is, do we have realistic ROI expectations? And so working with understanding your plan, are you just turning the keys over to the castle? What's the ROI that you're going to see in being more competent in that area? And so one of the things that has been successful in our passive income strategy is the 401k deployment in our practice. So we've deployed a 401k. We have chosen to do discretionary match for safe harbor. We have done a profit sharing connected to it. That profit sharing impacts everyone that is invested in it. Obviously, we have to do discriminatory testing and different things like that. But we've found a huge success in building our retirement as a passive income strategy for not just ourselves, but also for our employees. And so as we're looking at that, it also becomes a tax strategy advantage for practice owners. And so looking at the way that you are building your S Corp, your pass-through entity, real estate depreciation, cost segregation, qualified business income deduction, your backdoor Roth IRA, if you're doing that versus your 401k, all these different things can help you. And so I'm a big believer you got to work with a financial advisor. When you're working with a financial advisor, you want to look at their fee structure. You want to look at their fiduciary status. You want to seek specialized expertise, and you want to have some key interview questions. Ask about their investment philosophy, typical client profile, how they handle tax planning, what are their roles in your industry with business owners, etc. And so all these things can help. I've always been a really big advocate of real estate. One of the ways that you can build passive income is to buy the real estate that your practice operates in and have a lease back. But you need to look at, does it make sense? And so are you building direct rental property ownership? Are you investing in a real estate investment trust? What is the liquidity that you want? What is the time required, the minimum investment, return potential, risk level, etc.? Just because you can afford to buy the property doesn't mean that it's the best use of your capital. And just because you can put all that money down doesn't mean that you should. And so these are things that you should be looking at. Another thing that I recommend looking at is in index funds. You know, what are the S&P 500 funds, the total market funds, the dividend funds, all those different things. I am not telling you, I'm not a financial planner, I'm not a financial advisor, but I want you to understand these are things you should be researching for business practice owners. You know, low cost index funds offer a robust foundation for passive income without active management. And so just looking at some of these things, I recently had someone in one of my groups post, if you had $100,000 sitting that you could invest, where would you invest it after you've invested in your company? And a lot of people mentioned real estate, but a lot of people said I would find the right tax planning, the right financial advisor. And I think looking at all these different things to help you build your strategy is really important. Now, when we're looking at things outside of obviously the investment side, we can also build a practice adjacent business. And so that's where we look at online courses, group programs, digital downloads, consulting packages, licensing curriculums, etc. What are different ways? Now, consulting packages can often be you're just selling time, so be careful. But sometimes what you'll do is you'll build consulting through AI, and you'll do different chatbots and things that just support the everyday support of an online course or an app or something like that. And so these are all ways that you can kind of look at adjacent passive income to your practice. And so when we're looking at this, the passive income roadmap, there's a 3-phase approach in my opinion. So phase 1 is you need to stabilize. You need to max out your retirement accounts, build a 6-month emergency fund, and eliminate any high interest debt. That is phase 1 of your passive income roadmap. Phase 2 is I want you to invest. Begin your investing, explore one passive income stream. And then phase 3 is multiplying, building more streams, building real estate, diversifying. Because ideally we have 3 to 5 different passive income streams that we're building. And when I say passive income stream, that could be other businesses, that could be 401ks, that could be stock market, that could be all different ways that you could invest in that. And so thinking outside of the box there. I want you to avoid common passive income pitfalls. So avoid the chasing the shiny objects, avoid investing with high interest debt, avoid underestimating passive effort, meaning that you think it's not going to take time, it takes time. And then avoid not diversifying. You want to diversify and you want to get support. So passive income is a journey. It's not a destination. Expect an initial learning curve. I just started to add some different investments that I normally wouldn't do. And I am learning, and it hasn't been perfect. I've made a little, I've lost a little. So it's one of those things that you got to understand the risk, the reward, the time, the overall upside versus all the other factors that are impacting it. And so here is your passive income action plan. I need you to, one, this week, define your opportunity filter. Take dedicated time, write out your personal criteria for evaluating passive income opportunities. Consider your factors like capital, time commitment, risk tolerance, and alignment with your values. 2, for this month, I want you to consult a fee-only advisor. Schedule a meeting with a fee-only financial advisor. Their objective guidance can help tailor a passive income strategy to your unique financial situation and your long-term goals. And then 3, this quarter, optimize retirement savings. Review and either open a new retirement account like an IRA, a 401k, whatever you may have, but tax advantage accounts are foundational for your long-term wealth accumulation. So by taking these concrete steps, we're not just practicing our private practice approach, but we're actively building some financial freedom in how we choose when your practice is integrating both clinical excellence with strategic wealth creation. You're going to have the freedom that you're seeking. And so ultimately, what I'm hoping you can do is you can build a multi-engine approach to your financial goals. Your practice can be one fuel-generating, wealth-building engine, but that's just one engine. So how do we build more so that you're constantly diversifying and building the freedom to success in your practice? Thank you for tuning into this quick tip episode. I hope that you found it valuable. Don't forget to like us, subscribe, share us with your friends and colleagues, because together we can thrive, not just survive. Thank you for tuning in to the Private Practice Survival Guide podcast. I'm incredibly grateful to each and every one of you. Exciting news. We're now available everywhere, from Spotify to Apple Podcasts to YouTube or anywhere you like to listen to your podcasts. So watch, listen, and reach out. If you love this episode, please drop a 5-star review. It truly means the world to me. Are you looking for more ways to elevate your practice? If so, now is your chance. Reach out, go to my website, or email me at brandon@wellnessworksmp.com. And remember, it's not just about surviving, it's about thriving.